welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to the Frivolity. Happy Sunday morning. Just watching the intro go through. Suppose there's the camera there. Hey, how's it going? Let's see. Today is, and actually, I think I like to have this thing on just for a minute. It's the 11th of June, about 10 minutes to 11 here. My apologies, we started probably about 5-10 minutes late. Sorry, everyone. The level oneers are just sort of wrapping up now. I think they were still going through the Q&A session. Actually, I'm quite surprised how quickly this term is just flying by. I guess we're already into, week 4 or 5 of the level oneers, level twoers. They are deep into the weeds with Marat and Shartoshi, Gaps and GAN. Commitments and traders reports. I suppose they're going to have lots of fun with all that. Volume profile. Actually, we had a fantastic presentation by Marat on Friday. His relative rotation studies. Really good stuff. Should probably figure out some way to incorporate that into the education program as well. Tell you, it's a never-ending vortex. The candy store just goes on and on and on and on. I think if I'm not mistaken, the development team has been made aware that we kind of don't have half of the histogram data here on this image. Hopefully we can bring that to you in the not too distant future. Would make this a lot more useful. Also would make it a lot more useful if we could scroll back over time. We did actually have a scroll function working on this for a while when we came out of the Portugal meeting last year. So I'm not quite sure what happened to all that, but anyway. I suppose never been closer. You know how all that line goes. Chris and I actually, part of the reason why we started a little bit late was we have been recently trying to get this sort of summary newsletter. And I would like this to sort of go out on a weekly basis along with this Sunday broadcast. Just give you sort of an overview document, and if you want, you can get this in your email. We have a little tiny URL here for the sign up sheet, and also too for site members, and I suppose 30 days trial subscribers, all that kind of stuff. We have actually a section in the library now. So as soon as I come back from Liam, I'll dump the final copy of the newsletter in the newsletter category. But I think this one pager should summarize sort of the key takeaways of this past week. What I would like to do is sort of the first part of this Sunday show, just specifically speak about this document and the various different things that it's telling us. And then the second half, we get into the, ask me anything kind of Q&A session that a lot of people find helpful, especially for the level oneers, if they have any lingering questions following their session with Grim today. It's a good opportunity for them to pick my brain. Been at this game for a while. I don't think the rules really. Hey, look at that. Coke just gave us a Coke donation of $1. Oh, thank you, Coke. Appreciate that. That's awfully nice of you. I haven't actually measured what we're up to, but I think it's about $75 or something like that you guys have donated. So it's awfully nice of you guys. I know Nore, if he gets value out of the show, he donates a couple bucks for Liam's McDonald's, which is super, super sweet of you guys. Absolutely love that about you guys. I love the fact that hopefully I'm absolutely transparent. And, if you want to get to know me a little bit better, and Liam and my son. I mean, probably a big reason why I'm doing a lot of this is, of course, I don't know how the hell to navigate these darn Facebook pages. They drive you crazy. I don't really like to use Facebook. I don't really like Zuckerberg. But isn't that interesting? Look at all this crap that they've got here. Like, go away. Anyway, there's my boy. And actually, years ago, I set up a cute little donation wallet for Liam. So if you do want to specifically help Liam's cause out, I never spend any of the crypto or Bitcoin or anything. It goes right into a Ledger wallet, and it sits there. And really, all of those donations, never touch them. They are specifically for if this whole society just lands flat on its face and there is no more funding for special needs people. That money is specifically for him. But if you want to get to know my boy a little bit better and some of his plight, I do post, at least I don't know where it is, but here's our most recent one. I'll tell you though, he's not that interested in going down to the beach and throwing rocks in the water anymore. When he was a little one, he used to absolutely love doing this. But anyway, there's Liam, and that's our professional rock throwers tour. There we are. Look at him. He's even representing in TRI garb and everything. Anyway, that's my boy. So all your best wishes and stuff. This is who you are making those karmic wishes for. And like I said, when Nore, because Liam absolutely loves McDonald's, and this is when we visited Mummy in the graveyard. And I don't know. I don't think that's really healthy for him. I don't think he really likes that. But nonetheless, he does have to understand that Mummy's passed and the whole cycle of life and all that shit. Anyway, so whenever you hear me talking about there's Liam, actually, this was when right after Mummy passed. That's how long we've been. So this is now, and this was basically when the shit hit the fan a million years ago. So anyway, if I do ask you for karmic best wishes for me and my son, and you're just curious, who is this guy, this Liam guy you're always talking about? That's the center of my universe, and that's my reason for my existence. So when I'm done this video, I will basically head right on out, and my number one job is to try and put a big smile on his face. If we get the smiles, woohoo! I've done my job. So you can always go, I don't even know what my Facebook thing is. All I did, you saw it. I just type in facebook.com and it comes up, but I suppose you could probably search for Brian Beamish on Facebook. Anyway. Okay, so what's the message of this past week? And I have to try and get a little bit better at this. I've noticed the past couple times I've done this, and we just got started, right? Past couple times I've done this a bit rambly, but we gotta try and get this done in like a good half hour, 45 minutes, and a nice crisp message for you guys. Do like to show you the breadth indicator operating away. Over the past year or so, as we've been building this thing out, I have been talking about it lots in public. Actually, Julian himself has been doing a lot of sort of the number crunching of the breadth indicator. And if you had taken like 1x leverage trades, long only trades, 2x leverage trades, long and short, what are the various different results? And if anything, it's quite pleasing to see that my life's journey, because this breadth indicator, the DI index, specifically, what the hell does DI stand for? It stands for Delacour Index. What the hell is a Delacour? Well, it turns out for whatever it's worth, just in case you were wondering, like the old Smith song, it turns out I'm the 18th pale descendant of some old queen or other. Who can tell me what song that's from? I know you're a Smith fan if you could tell me what song that is and what album. Anyway, officially, my name is Brian Delacour Beamish. I think I'm the ninth, if I'm not mistaken. Can never remember. I mean, it's kind of an irrelevant thing. But anyway, every firstborn son since the days when the Beamishes commanded a regiment in the King's Army, and they went and beat up the Irish over there, and the Beamishes were handed the Beamish. Actually, they were handed sort of as landed gentry, and total off topic, but anyway. That's how far that goes back, into I think it's like the 16th or 17th century, something like that. Anyway, so this is my lifelong work. This is my contribution to the universe. Not only the Delacour Index, which is basically about 45 different technical signals all smushed into one, but then the idea of measuring the entire market. Do you trade the stock market? Oh, I buy the Dow Jones Industrial Average. Or do you trade a market of stocks? Well, I'm buying the Russell 2000. I've heard like this particular sector. I like that particular sector. The breadth indicator speaks more to that. This is a market of stocks, and there's always an old expression in the market. It works really well. A rising tide lifts all boats. I don't know if you've ever heard that expression before. And then, of course, a falling tide sinks all boats. So that's what basically this breadth is all about. Is if the entire market is moving up, it's probably not a bad idea to be long. If the entire market is moving down, it's probably not a bad idea to hop off or maybe be short, or even consider long proxies that make money if the market goes down. Like this particular chart of the week. And every week I like to give you like a trade idea that we've been talking about in the past week or so on the site. And I've been quite excited about, I don't know how to zoom in on this. The down proxies in crypto. So for instance, this is BTC down. And actually I was putting tweets out to this effect that, some people, in fact, when I was a stockbroker, I can tell you this because of personal experience, very few retail customers in the stock brokerage business short stock. Oh, very, very few. So that's why, to a certain degree, they created a lot of these bear ETFs. Whoa, Adam, thank you, sir. Oh, hugs and kisses. Liam's eating Big Macs today, thanks to Adam and Coke. And Coke is Coke's paying for the Coke, although I don't know whether that's the same Coke as he's referring to, or she. I don't know. I suppose Coke could be a houseplant too, but anyway. But thank you, Adam. Appreciate it. But the point here is a lot of people in the market do not like to short. And also remember too that technically if you short something, there is the open-ended liability. Actually, I even heard Druckenmiller, hey, Eddie here in the lounge was sharing a recent video by Mr. Druckenmiller that probably each and every one of you should watch, although, gee whiz, he sure is looking old, eh? He's got the old, he looks like he had a stroke or something recently. Jesus, he's looking a bit challenging. He should probably go see a doctor. Anyway, don't try and see a doctor in fucking BC, Canada. Substitute drama teacher hell. You're not gonna be able to see a doctor here, that's for sure. But at least down in the States, you can buy health insurance and just go find a doctor on your own. Anyway, the point here is Druckenmiller was even talking about in his video. He doesn't like to short either, because technically, you can buy something, and if you're 100% wrong, fine, you lose 100% of your money, boom, gone. But you could technically short something and be 100% wrong and lose like 10x your capital, right? Maybe even bankrupt you. I mean, it's definitely possible. So I can empathize with a lot of people, and definitely, retail Joe Sixpack, they don't really know what the hell they're doing in the market. So going and outright shorting stuff super dangerous. So, the advent of all these bear proxies, and I didn't really want to mention it, but of course I'm gonna. It's because I'm a funny idiot that way. Um, the trade that I actually really like right now is that bad boy, eh? And is anybody talking about Ethereum going down in price? Nobody's talking about Ethereum going down in price. Everybody thinks it's just going to go up and never stop going up. Well, I hate to say it, this thing's actually saying that maybe Ethereum needs to go down for a bit. And actually, what was interesting about this, yeah, I put it side by side. This is like a 2-day chart, just to give you an idea of how far this thing's fallen. This silly thing used to be 1,500. Is that right? No, $1.50, beg your pardon. So here we are at 26, and I actually kind of like this megaphone pattern. And actually, this is a really good lesson in megaphone. Sometimes the actual bottoming pattern of the third tag can look like a big old market structure signal. And it's only, our rule, of course, is that we want to see W's on other sides of trend lines. So there's your prevailing downtrend line. Great illustration here. This is not a buy here. You're going to get your head handed to you if you buy that. And sure enough, ooh, look how smart I am. Oh, I'm a social media genius. And then kaboom. Oh no, it's gone. So really, really good example why you do not take trades on trendline breaks. So market finally recaptures that. And okay, now are we finally going to get some sort of W? And you can see we got W within W. And actually, if you zoom in on that, you can see there's one W, and look at this cute little W right there. Oh, that's so sexy. Then another W. So, gee whiz, this thing kind of looks like it's pointing up, eh? So, and if we do things like Foggenbaum's, interesting how, 4669s are going to do nothing more than just take us back up into the reload zone of this range here. But if we look at this as like a megaphone, then I get the distinct impression we got to go up against this trend line here. And I do love Confluence. I'm a big, big fan of Confluence. So notice, if we draw our study, suppose that should be drawn off of that low there, wherever that lowest low is. Maybe it is there. But 38.2, I have a site alum who loves the 38.2 to 50% level as his, I'm going to join this trade as it's working away. So that would be like the dump chaser zone. If we put that over here, that's way up top there. Kind of like a stab all the way up here. Like we got hopefully a lot of you guys watching my videos recently have clued into the whole trapped bulls and trapped bears concept. So you can see there was a whole bunch of people that went like uber bullish on this down proxy here. And they bought in here and they're all trapped and they would love nothing more for price to get back up into here and release them. So somewhere up in this area, it's not a bad thing. And that implies, oh boy, Ethereum could come off a chunk here. And I suppose, the news du jour, in fact, we were reviewing this sort of in the lounge before we got going here today. And I don't know, I get the distinct impression these Democrats, they are real sort of anti growth type people. But Joe Biden, union guy, all that kind of talk. I suppose it makes sense. He wants a strong U.S. dollar. Got to make sure all the slaves are kept in slavery, right? No, you're not getting out of here. So if anything, keep in mind Roosevelt, he was the guy who actually officially outlawed the ownership of gold for speculative purposes back in the 1930s. So in a weird sort of way, I always get the impression that Democrats are actually more sort of dictatorial and more sort of authoritarian, more kind of like that big brother kind of society. It sure feels like, and I suppose Pizzagate, right? Pizzagate guy was Democrat, and Clinton. I don't know. Is there such a thing as female Pizzagate? Anyway, do we want to open up that big political can of worms? I don't know. Anyway, we were just pointing out in the lounge here this morning, somebody, Nick had posted this, that there is a lot of shit coming down the pike here in crypto this coming week. Lots and lots of FUD. So it's going to be a bit of a tough slog here. I'm not going to sugarcoat it. And that's sort of why on the newsletter this week, that was sort of my chart du jour. You don't necessarily have to play the market short, although I think these shorts were very well telegraphed. And it's been a pleasure. I sure hope, like, this is the whole reason why I have this school and I have all you guys, social media and all this crap here, because I literally walked you through this trade from beginning right through to now, and I will continue to walk you through this trade right through to the end of it. So I tried really, really hard, especially on things like this total market cap. Tried really hard. This is an El Tangonator setup that we actually teach in our education program. And I thought this was such a cool illustration because as you can see, the market's breaking down here. I mean, you did have an opportunity to get in on that clothesline level on that little candle there. But let's say you even just missed that day and oh boy, all these M's are confirming. What do you do? So I even threw it on this particular day here where you're just going to work your open order at the appropriate level and just be patient and disciplined and just wait for your fill. And this was fascinating. I mean, who knows how high this thing was going to rally, but we rallied up into the appropriate shorting level. In fact, we used to have a guy on TRI. He would religiously only sell and buy these candle close levels. But what I thought was just super, super cool about this concept was, if the market had just gone straight down here, you would have missed the trade. Just no big deal. Next bus in 10 minutes. But what a great analogy that you work your order at the specific level and you're basically going to risk this M top here and live with the results. And fascinating how the breadth indicator was pretty negative here through better part of May. Then we started to climb our way up. We missed a really cool long trade in crypto through here. And then everything started to fall apart there. Basically the end of June, beginning of July, end of May, beginning of June. And then notice, this thing actually tagged that level. That's where the trade would have actually fired. And it's just been nothing but straight down since. I mean, it's just absolutely so cool how that just aligns perfectly with that breadth signal. Just you can't get any better than that. It's just absolutely perfect. I tell you, this breadth tool, this thing is next level. Really, what I'm super pleased to see now is Sjord has reported that he does have the computer actually trading these signals now. Not necessarily off to the crypto. We're just trading the Bitcoin price itself off of the signals. Ironically enough, probably this total would be better to be working a trading plan with. I just don't know whether you can trade this crypto total. And then also too, we're trying to be like good citizens. So, you got the Americans and, substitute drama teachers. They're even worse than the Democrats down in the States. So if you thought the totalitarianism, the authoritarianism of the world is bad in the U.S., head on up to how the hell does a substitute drama teacher turn into a totalitarian dictator and not even have a majority government? I mean, that's the baffling part about this. A majority of Canadians have never said that they want this dickhead to be our leader. Never. He's never won a majority vote in our country. It's all these crazy coalitions that these silly parliamentarian systems put together. So how ironic. The guy has actually been like the most totalitarian government leader in Canadian history. And he's just decimating the classic Canadian country model. I mean, he's like literally trying to rewrite the history of our country. It's just, you just sit there and you shake your head. You can't believe what's happening. Anyway, it is what it is. So I think our choice now is we can use Kraken and maybe Coinbase, but who knows? Thought it was interesting. People in the lounge were posting articles that the Hong Kong government, and it's bad when Hong Kong is actually saying, "Hey, come on over to here and be a capitalist." Like, you got to be kidding me. I tell you, the West is walking into a major trap if you're going to fall into that vortex. But God, you just can't write better fiction than reality with this stuff, eh? Anyway, back to what I'm trying to say here. Apparently, the signaling system is working beautifully, but now we have to figure out where the hell we can actually trade this thing. And I think our API and stuff is going to work out of Kraken now. So anyway, look forward to that. That should be a lot of fun, and also should be an absolute revenue generator for not only TRI trading the signals, but also our customer base. I mean, you guys should do really well with this tool. And it's like basically like my life story. So it's my entire career all wrapped up in a pretty package with a big fancy bow on it. Let's see, where were we? Yeah, Jesus, man, that's sure. I haven't even said anything here today. I can see why I don't really have that many viewers, because I just ramble on mindlessly. Anyway, so what was I supposed to be talking about? Supposed to be talking about what the breadth is telling us. And actually, this is a really good analogy where if they are moving in opposites, then the signals are probably going to be relatively weak. But into the end of the week, the S&P 500 finally rolled over and flashed a sell signal. And literally on the date that it did that, Bitcoin just puked right out. So everybody's pointing all down in unison now. And of course, Bitcoin's now absolutely pooping the bed. So why? As sort of, and keep in mind, I put together a 2 or 3 sentence summary of what I think's going on in the market. So what I think's happening here: broader market's getting ready for both the June FOMC meeting. It's interesting how it seems that the market is actually pricing in that the Fed will take a bit of a pause here in this meeting. I don't know whether that's warranted or not, but I suppose if you are a fan of the Great Reset and all that kind of stuff, well, then they're just following the course. They are great resetting. I've said repeatedly it would have been far better had they just, actually, to be honest with you, they moved the rates up pretty darn fast. So we haven't really seen that in history other than the 1980, 81, 82 interest rate increases by Mr. Volcker. And surprise, surprise, this is exactly the same part of the cycle. So seeing those similar sort of increases in interest rates, really not that big of a surprise. But I guess the point here is there are some people that are anticipating that actually they're going to skip this particular month. Maybe they do, maybe they don't. I don't think that the credit market is in crisis right now. I've shown you guys this repeatedly. This is the teal line here is the relationship between the sort of the corporate interest rate market and the guaranteed lender of last resort. It used to be the U.S. government was the lender of last resort. U.S. government technically went bankrupt in 2008. So as a result, now we live in the Fed funds is the lender of last resort. And really all this is a cartel. I mean, it's so ironic that the Americans have the audacity to be upset at things like OPEC, when really all OPEC is it's basically the exact same thing as the U.S. Federal Reserve Board. It's identical. It's just OPEC happens to work in the oil industry, which is outside the United States' control. And the Fed and the hegemony and all that bullshit is inside the United States. And, you might even argue that a big part of the Fed is actually outside the United States, because really you could make the argument. I mean, this is the hilarious part about it, is when JP Morgan died, they found out that the Rothschilds actually owned 20% of JP Morgan. So you say, oh, well, JP Morgan's a big US bank. Well, ironically enough, it's not, because I would be willing to bet the Rothschilds even own more now. But a lot of these, big sort of money center banks are nothing more than just puppets of the banking cartel elite that actually just, runs the world, right? And all that bullshit. So anyway, point of the matter here is the teal line. If it gets above 1.0, then we've got problems. And ironically enough, you can see from this image, we did get above 1.0, although this is kind of messy. I've kind of screwed this up. All these funny lines. Anyway, try and do this on the fly. There's 1.0 there, but you can see I've kind of screwed this up. All right, so 1.0 on this teal line. We got up into here. There was a crisis in the banking sector. And oh, what a big surprise. We found out that places like the first bankrupt bank, whatever the hell that was called, First Republic or something like that. And then Silicon Valley Bank goes under, and then Signature Bank gets nationalized, the whole damn shit, right? Anyway, we're not in that crisis scenario anymore right now. If anything, I think things are calming down here. So we'll see how this plays out. I mean, you don't really want to see these two lines, the orange and the blue. You don't want to see them get too far apart. So if anything, the Fed looks like it's moving in lockstep with the corporate money market, and if that's the case, then it's just business as usual. So we'll see how that goes. This is our longer term sort of look at sort of the interest rate rising and falling cycle pattern on the short term interest rates. You can see interest rates bottomed out, and we had to go through a long period of interest rates rising. Then we had to go through a period of interest rates falling. This, of course, was that sickness economy, all that nonsense. And then coming out of the sickness economy, the rising interest rate environment, here we are. And you can see we're getting awfully close to some sort of pivot here. So I wouldn't be surprised if we're closer to the bottom than we are the top, that's for sure. We're like closer to the top in interest rates than the bottom. Hearing a lot of people squawking about how they really like being long US Treasuries. In here, Hugh Hendry, I don't know whether you ever heard of that guy, but he's basically saying that, things like the gold trade are highly, highly crowded. And the part of the market that he likes the most right now is the bond market. I don't know whether I really like bonds or not, but you can see ABCDs, even alt ABCDs, we're probably, this thing's come down an awful long way. There was our stupidity of the top of the Jupiter-Saturn cross, the end of basically 80-year interest rate cycle, great reset, whatever you want to call it. Interest rates absolutely skyrocketing here just out of nowhere. And of course, even the MMT people, all those kind of people. And this is where it gets, put on your tinfoil hat. Is it a conspiracy? Did Janet Yellen try to get everybody to go long US Treasuries up top here, which was just an absolute stupid idea? Did she do it out of stupidity? I mean, was she really that dumb? Or more importantly, was this all a conspiracy and they knew bloody well what was going to happen? Are you trying to tell me the leader of the U.S. Treasury Department doesn't understand Jupiter-Saturn cross cycles and 80-year money cycles and the money masters and all that bullshit? Come on. So me personally, I think that this was a fraud. This was a conspiracy. It was a trap. And a lot of the money center people They wanted desperately to get the regional banking system under control. Also, too, this whole sort of while the U.S. was weak and vulnerable, because basically the U.S. government was bankrupt there in 2008, banksters couldn't do anything. They couldn't dictate policy. They had to go on a money printing binge to try and solve their just absolute insolvency, and they pulled it off. The problem in that environment, though, is that because they were so weak and they were so vulnerable, they actually had to acquiesce to things like private equity and, Peter Fink and all those kind of people. And I think the debate going on right now is, can the U.S. Treasury, the U.S. government, the people that are sort of part of that 1% ruling elite, can they wrestle back control of the system from the private equity people? And I think to a certain degree, this violent move, which is just way too far, way too fast, in my opinion, but this violent move was nothing more than to try and shake the private equity market people out of control of the system. I think Mr. Hendry would suggest that, and this just common sense, good old 50% rules, probably going to see the U.S. Treasury market rally back up into this sort of 130 area. But this would imply that the U.S. economy itself is relatively weak. And we'll see what happens. From what I understand, this whole debt ceiling debate just in the short term could drain a lot of liquidity out of the system. So that was one of our big headlines here for today. I'm not sure which screen it is that we have on here. Was it here? Yeah, this here. So not only do we have the Fed coming up ahead of us, but at the same time too, and this might be another reason why the Fed might pause here, is because this U.S. debt ceiling debate, and it gets very mathematical, so we won't really get into the nitty gritty of it. But in essence, the U.S. Treasury's sort of checkbook, for lack of a better word, was completely drained, and there's almost no money left in the U.S. Treasury to pay its bills. So the talk is there's going to be an absolute deluge of U.S. Treasury issuance to try and build up that cash balance again at the Treasury. You can by all means go and read some of these news headlines to sort of backstop what I'm talking about here so you understand the fundamentals. By all means, sign up for our, this is just basically you can sign up. You get the newsletter in your email. Chris will send it out when I'm done here blabbing away. And you can have this as a nice reference piece going forward. Also, to site members, you can access it on the library in the newsletter section. So I don't think this is, it's not rocket science, but I'll tell you, this could definitely, just think of it in really simple terms. They're going to float a whole bunch of really big loans, IOUs. And they're basically going to say, we'll give you this piece of paper, you give us the cash. And of course, all the banksters, they are part of this Fed. They're part of this U.S. Treasury system. They want to dilute. They want more debt. They want to add a zero onto the end of all the numbers. And then that way that gets rid of the whole, debt to GDP issue. They just hyperinflate the economy. So this is playing right into their hands. The issue, though, in the short term is you got to have that cash. So where's that cash going to come from? I think the cash is going to come from the stock market. So somebody who had bought the stocks, and I've been barking to you about this for a while, I think that there is a megaphone working on Bitcoin, and it's been working for quite a while. And usually Bitcoins megaphones are distribution events. So I think that we hit a distribution event up top here. And this is one area that I think probably, I mean, keep in mind, if you're an institutional player, you're buying when it snows, November, December. You're going to sell when it goes, April, May, June. So seasonally, that's perfectly appropriate time of the market. And, if you're Joey or if you're Goldman Sachs or if you're any of those kind of people, you have to participate in this old treasury charade. So if you did buy a bunch of crypto, and of course, all the crypto kids bidding prices up to ridiculous numbers, I'm sure a lot of those big bank institutional players are selling to generate that liquidity to buy up all the US treasuries that they're going to have to buy. And that's going to have sort of a detrimental impact on something like Bitcoin, which is just another speculative asset in the marketplace. The worst part about Bitcoin is that the cost of production, and it's so frustrating when you talk to crypto people about this, because when price does come down, they go, "Oh yeah, you're right. Yeah, it's the cost of production, and yeah, it's, why are we chasing it up top?" But literally, as soon as price takes off, people just throw this shit right out the window. I'd make an argument that there's your cost of production down there, and actually, the guy who actually built this indicator years ago, he has a newer version, and it's something like water cooled processors, whatever. I'm not quite sure what the name of it is, but anyway, it's not a hell of a lot of difference lower in price than this S19 XP. So I think that the industry sort of base production cost, you can see that's $12,000. So, I mean, who knows how the hell this is going to play out? I wouldn't be surprised if we get some sort of just normal technical pullback. You can see here is reload zones relative to the range. So that would be normal. I mean, I wouldn't be surprised if we get some sort of dump, then some sort of counter trend rally through the summer. And then maybe into September, October, November, we finally get our capitulation dumped down into value levels, and that sort of is the official reset of this cycle. All right, so we're half an hour in here so far. Bear setups on the corn. I do kind of like a tag of the midpoint of this megaphone. Seems logical. Also, 2.618 Foggenbaums off of the original M top also seems perfectly logical. This happens to be one particular perspective on Bitcoin. We can look at it from the 3-step setup. There's that Foggenbaum 2.618 off the original top. I suppose you could make the argument 50% rule is probably a pretty good profit objective as well. Sandy's kind of dump down into these areas. It just seems logical. And then what I thought was uber cool, and I had sort of tweeted this out recently, is you can do basically the same logic going the other direction with these Bitcoin bear proxies. So this is being long Bitcoins, and this is the chart I think I wanted to mention most. You can be long, but you don't necessarily have to. You can be long, but the market can go down. You can still make money from trading. So I thought this was fascinating that while the 3-step setup is working on the bear side, going that direction, the El Tangonator, which is nothing more than bullish momentum divergence confirmed through the MACD histogram through here, Willie stupidly oversold. This is an indicator that I built years and years and years ago to tell me when the market's overbought and oversold. And when this yellow line is below minus 80 on the Williams percentage R oscillator, it implies that the market is stupidly oversold. Probably not a good place to be a seller. It doesn't necessarily mean this isn't going further lower, just not very good place to be a seller there. And sure enough, you can see indicator slowly working its way back up. And then finally, do we have any kind of W's to work with? And sure enough, there's 50% levels. And does the 50% level, if I just risk this W, and I'll risk to new lows on this, Does a move back to the 50% rule equate to better than a 2-to-1 risk reward? In that case, it's like 3.8-to-1. So, whether it be long trades in the bear proxies or short trades in the bull proxies, I think this market markets go through accumulation and distribution. And I would argue that this is our distribution phase. The irony of all of this is exactly when we're supposed to be going through the distribution phase. So if you look at this from a seasonal perspective, I found time and time again that literally my birthday comes along and you should just walk away from the market. The good part about it now is we don't have to blame Brian anymore. Thank heavens. I mean, it's all Chris's fault, it turns out. Okay, that joke's probably getting a bit stale now. But anyway.
We'll see how long that lasts.
Yeah. But this is just so normal. I mean, it is just ridiculously normal. And that's, a lot of the new people to trading, new people to the market. I watched a video with this one girl who just practically took a shit. I mean, she literally shit her pants on screen while sort of moaning and bemoaning this bear slide here. And like, of course, and new people to trading, when they see, days where Bitcoin loses like $1,000 in one day, they get all freaked out and, oh my God, it's the end of the world. And how can this regulator do this? And what an atrocity that is. And, I hate to say it, this is just business as usual. And this is one of these kind of things. Is the dog wagging the tail, or is the tail wagging the dog? And I might make the argument that the market was going to come down anyway, right? Buy when it snows, sell when it goes. So are we, it might be interesting if we had all this negative news and FUD and stuff while the market was moving up through its normal seasonal bullish pattern. Would it have been interpreted the same way? I don't know. But now that we have M's working and we're going through seasonal correction windows, and the stock market looks like it's getting ready to megaphone out and stuff like that. We have, of course, big fundamental drivers. The regulators are coming out really hard. The political party that absolutely hates crypto is in charge of the U.S. government right now, so that's a major headwind. Don't fight the Fed. Fed's been raising rates, and are they done raising rates? And are they going to break the economy? Blah, 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 blah. I might argue, just sell in May and walk away. That's what's really just going on here. It's pretty just business as usual. So anyway, the interesting thing about this, and this might be something that might be a seed change, which I don't think a lot of people in the public, and especially the new crypto influencers, they don't understand any of this shit. But I actually think there's a change in the wind. There's, how do you say this? The winds of change are blowing, or there's something smells slightly different in the air. But usually, and you've seen, like literally through this entire Fed hiking cycle, the market has generally been rallying into these Fed announcements. I suppose this wasn't that much, but if anything, this might even be a little bit of a tell, sort of, forward-looking discounting mechanism. Notice the market is not rallying into this Fed announcement here. Now, maybe I said that, I'll leave with Liam, and then over the next 2 days, we have just some monstrous, horrific rally into the Tuesday, Wednesday event. Keep in mind, the Fed coming up here is Tuesday, Wednesday, and we'll have our crypto, well, it's not really crypto, but it's sort of like our TRI public broadcast Fed announcement. That's always fun to tune into, where you listen to Brian barking about what the Fed's doing and reaction and rules of thumb around all of it. But you can see, even just over the past couple of weeks, the market is not rallying into this Fed. And you can even see, I put this on the chart back here and said this was my optimistic view that actually we were going to rally into the Fed. And then what ends up happening is this is a buy the rumor, the Fed event happens, and it's sell the news, and we dump on the other side. Well, Fed's not, I mean, the market is not rallying into this Fed event. If we actually puke out and dump here, and keep in mind, as I said there earlier, people on the TRI Lounge were even posting earlier today. There is a lot that's coming down the pike here for crypto in the next week or so. So if we find that the market dumps into that Fed, notice all the different things that are coming down the pike here for this week. Lots and lots of stuff. If we find that the market actually dumps into this Fed announcement, that actually might be a very significant sort of sentiment shift here. And it might be like a harbinger that we're getting a lot closer to the bottom than the top. I mean, as good technicians, we're supposed to, at any given point in time, expect a 38.2 retracement of whatever your trading range is anyway. I mean, that's just what good technicians do. Of course, I don't think many of the people that are newly minted technical analysis experts in social media even have ever even heard of 38.2s. But, you know, let's see, why can't I get this study? Bring to front, send to back. All right, so it's already been sent to back. Why can I not select that? You knucklehead. Anyway, let's see, I guess I'll have to do this. Did that work? I don't know, let's see what happens. So, boom. Well, give me a bigger line. Boom. I can't even see that. Come on, give me a bigger line. I want bigger. Bigger, bigger. I want bigger. There we go. So, really shouldn't surprise us. We're within a heartbeat of this market actually officially cleaning itself up from this ridiculous face rip move up. And you might find that the goddamn market actually bottoms in here, starts to churn its way higher. Still think that we have to get through the end of this seasonal window, and I wouldn't put the cart before the horse. I would definitely say, you know, following the Fed announcement, let's see what the hell this thing looks like. And we all know the rule. For heaven's sakes, you cannot get bullish of Bitcoin here until we actually see a W on the other side of this trend line. So I've been telling people on this site, what I really think we're doing is we're just walking our way along this trend line. And it sometimes can drive you absolutely crazy the way that it has to do that. So if anything, what you got to be right now is just uber patient, uber disciplined. Don't push, you know, the old expression, you can't push a chain. So I wouldn't be in a big hurry. And normally our seasonal window actually sort of finishes the end of June, beginning of July. So not only do we have a whole bunch of crypto FI coming up here, and if anything, we get a whole bunch of rulings and shit, and the market just dumps, then I'd actually say that's probably your bottom, because that's a sell the rumor. All right, everything's come out. Now what is there? With the Fed saying that it's almost done raising interest rates, all these litigation and stuff and lawsuits and crap are flying. But now what? And you find that the market actually turns around and starts moving back up. I think we're definitely, quote unquote, trending lower. So I'm certainly not pounding the table bullish here, that's for sure. But this, in my opinion, actually is an absolute horrible trade location. I wouldn't recommend anybody to go short here. And I really wouldn't recommend you go long until we can dump our way back down into key support here. So you can see, ironically enough, if I actually wanted to do a trade in Bitcoin, or if I was a broker and somebody called me up and said, hey, where do you want to buy? Where do you want to sell? I would be more than happy to let you have some Bitcoins out of my personal holdings up at about 29,000 and change. Perfectly fine letting you have some Bitcoins up there. At the same time, too, I'm perfectly happy to buy Bitcoins off of you if you want to sell them at about 18,000 and change. So kind of like being on the border between Ukraine and Russia right now. This right here is no man's land. And oh boy, you could get whipshod back and forth violently. I'm willing to short up here. So that's up in Belgrade, we'll say. I'm willing to defend the Russian lines up there. And I'm willing to go long down here. And this would be like the border of the Donbass region and Ukraine. Of course, about halfway of what Putin wanted to achieve with his winter offensive. But anyway. So this is no man's land. This should be full of landmines. This should be full of barbed wire. This should be full of poison gas. A horrible place to be trading. And ironically enough, you actually look at the price action, and I think that actually speaks well of it. Because if you bought here, you got your head handed to you. If you shorted here, you got your head handed to you. And it's just going back and forth, just driving you crazy. So there's your Bitcoin summary. You're too late to sell and you're too early to buy. There you go. Merry Christmas. And then, of course, like I said, originally, the whole point of this conversation is the seasonal window for when we're supposed to get like bullish again isn't till over here. Now we're close. But they always say, right? Close only counts in horseshoes and hand grenades. So we're not there yet. I mean, if anything, we want to fast forward ourselves over to the first or second week of July. I mean, ideally, we're still in this neighborhood. Scarily, we might be down here, which is totally possible too. So just be aware of that. This is definitely no man's land. Very, very dangerous territory. Very dangerous. All right, so that's 45 minutes in. Let's see how we've done here. So we talked a little bit about how the breadth indicator at TRI just fucking nailed that top there. It's just perfect. Way to go, TRI breadth. You rule. And really what I want to encourage everybody to do is the retail price to subscribe to the breadth indicator right now is very high. But we do like to sort of incentivize people to sign up for that sort of Black Friday kind of event. So that's what I would really, what I want to see is Sjord should have the automated trading for the DRI breadth running up and running. And of course, Julian is feverishly working away on all the marketing pages with Josh and stuff to really frame that nicely. If you happen to be a member of the site and you're using it, awesome, way to go. I'm manually tracking the trades, and I love it to see the price of Bitcoin come off, because right now, according to my trading plan, the algo trade, I left the market. I actually sold everything, so we're just sitting in cash. I missed a really good trade there. Probably could have got back up into the 60s, no problem. But I'm sitting on cash right now, just waiting for the next buy signal. So if anything, I'm sitting absolutely perfectly positioned, just patient. There's no hurry here whatsoever, and there's no hurry from the algo to do anything right now. So it's just big hurry up and wait. And of course, we got all this fundamental crap hitting the market this week. Now we've got both the S&P breadth and the crypto breadth pointing down. So I would expect more fireworks to come. So we talked a little bit about the debt issuance and what's sort of the big driver here. I hope I explained that well. Probably didn't do it a very good job, but I tried. So we have, the buy when it snows, sell when it goes crew. I think that, the very typical sort of seasonal trade in this stock market, the commodities markets, the Bitcoin market, I think that's played itself out. We are now going through the very normal sell in May and walk away. Seasonal correction. How deep does this go? My hunch is 30-period SMAs, candle body lows for trade location, whole bunch of trap bears that would love to get released. Like a stab down here, trend line support somewhere down in this area. And of course, there is the July 4th holiday weekend. That's where I would actually expect this market to start turning. So we got still a ways to go. And if anything, this is a really, really good lesson for everybody watching this video on how when you have moving average support like this, very rarely can you ever go down and just punch straight through this. What needs to happen is it needs to come down into this level, and then it's got to have some sort of violent news that just rocks the market and people go, oh, crap, right? And that's what we're getting with this candle here. So obviously with all the SEC crap and, of course, Mr. Biden's not a fan of crypto anyway, so that doesn't help. And going after Binance and all that kind of stuff. That's sort of okay. We finally got enough FA drivers to punch through all this. Next stop on this study should be 30 SMAs. Quite often, though, you can get violent swings around the 30 SMA. Where's a good example? I suppose like here. Where are we here? Well, we're gonna have to go back a little bit in time. All right, so you can see here we went up, then this is what I'm kind of thinking happens, right? We dump through it, then you notice by the end of the week, we actually come back and play with it, then even dump a little bit lower, but then come right back to it, and then we finally reverse off of it. Notice here, same thing. Notice we dump through it, but then next week we come right back to it, and you could make the argument that we're sort of trying desperately to hold on to it. Then we started to really lose it in earnest down over here. So I think that's what happens with this 30 SMAs. We kind of play with it. Don't be surprised if we have some crazy ass tails like this through all of this news event window, FOMC event window. And actually, interestingly enough, I even heard that Binance is petitioning to have Mr. Gensler removed from the SEC because he's too personally involved in this space. Which, frankly speaking, if you heard that and some judge said, I actually agree with that, Mr. Gensler, you're going to have to recuse yourself. That might actually send Bitcoin making some sort of, and let's all for the records. I want to hear everybody, all 43 of you in unison. What do you call this part of the candle? And don't get this wrong, because it just drives me crazy how social media influencers, they're like literally coming up with new names for the parts of the candle. Thank you, Eddie. Hey, one person listened to me. Call. I love it. It's just like, who are these people? And then they have the audacity to say things like, take my school program and learn how to get rich trading. And it's like, you got to be kidding me. Oh, God, drives you nuts. But that's what often happens in frothy markets, people. I remember in this market, funny anecdote, drive you crazy. We had this one little girl, and she was like some sort of, I don't know, she's a Scientologist or something along those lines. And she came on the website and, of course, got all sucked into the euphoria of this market. Whoa, Norway, Jesus, Liam's living large this afternoon. Damn, thank you, sir. We're having gold-plated chicken nuggets on you, sir. She came into the market here. She didn't have any idea what she was doing. She literally copied everything from our library. And then through here, she just announced unitarily one day she was going to go into the teaching business of trading. She'd never traded before. But hey, this is so easy. Anybody can make money doing this. And then they always say, right, those people that can't teach, or those people that can't do, teach. So it's kind of ironic that for some reason, I've been sucked into this teaching vortex. And then for the record, we at TRI never really wanted to be in the teaching business. The reason why we did the education program was to fund the development of this. And I'll tell you, this has cost easily $1 million to develop, considering our CTO built this platform from scratch, like literally nothing. And now it is just an absolutely insanely powerful platform. And, this has been like a 5-10 year endeavor. And, I mean, you start adding the numbers up and it's a lot of money we've thrown at this thing. That was the whole reason why I did the school program to begin with, folks, just so you all understand that. I mean, I love making a positive difference in the world, but I never really wanted to be a school teacher. What I wanted to do was get my lifelong dream, this Delacorte index, up and running, and it's doing its job. I mean, I can't tell you. I thought it was fascinating, just as a good side, a concept that you're never going to hear anywhere else, anywhere on the interneting. This idea of the weekly key reversals. This screener just simply spits these things up as they happen. And I got to tell you, man, these signals are just killer. So all I got to do is I just got to just start trading my own damn cooking, right? I mean, you saw the NASDAQ was a key reversal screener there. And that was basically this signal right here. You tell me, was that a good signal? If on the date that this spat out that outside upside key reversal, incredible signal. If I had just gone and bought some out of the money calls for a couple months down the road, and these things are trading at nothing right here, how do you think I would have done? I've been a happy camper. I mean, damn, you see it right there. I mean, in fact, I did a whole tweet of these things out. Eddie tells me I'm not supposed to tell you in real time, so I don't want to show you the chart that just spat up an upside key reversal, but I'm going to break the rules just because I want to show you it. But you can see this thing's it's getting going. You can see it's starting to climb. So, I mean, the good part about this is what I'm talking about, that this platform is just, it's my whole career. It's everything all wrapped up in a pretty bow. And the good part about it is Stuart's now finally got to the point where he actually has like algorithms themselves actually taking the trades. So never been closer, as we always say. Anyway, okay, so where was I? I don't know whether I'm getting any better or worse at this summary statement, but I'm trying. I never really did talk too much about weekly commodity trend survey. I don't see a heck of a lot new other than obviously the crypto market is calming down. There's not that many cryptos that are still in the buy window. A lot of market is just calming down and just going sideways now. So we did go through a very friendly seasonal window there. It was an excellent rally window there. Eddie, how many doubles did you get off this past 6-8 months? I think probably. I mean, Eddie is working his trading plan like a boss. So I'm kind of slack a little bit. I got a few doubles off, so I got nothing to complain about. But I think, yeah, he said he got 40 doubles off, and Eddie's like he's taking this very, very seriously. So he's doing it like a boss. And I always mispronounce the guy's name, and my apologies. Let's see if I can get it right. I can't even pause. It's like I've got Tourette's when I try and say this guy's name. I don't know why. Julian? Did I say it right? Julian? Anyway, another absolute boss trading. Hey, I got it right. Thanks. Every bloody day coming on the site, banging on doubles, having fun over on KuCoin. Hope you're enjoying being in the shitter over there in North America, Brian. But I think to a certain degree, a lot of that sort of on pause right now as crypto is cleaning itself up. But the good part about it is that really all we're doing is just, like I said, cleaning ourselves up and getting ready for the next run. I thought, like this is a good example, Stellar Lumens. In there's some idiot that goes online and talks about markets in reload zones. Suppose there to there, there to there. And look at that. What a perfect example of Brian's big fat frickin' fib. I mean, if you had your stink bid working down there, would you be a happy camper right now? I reckon so. I mean, me personally, I'm kind of waiting for a little bit more than just location. I'd like to see some indicator confirmation that we have bull divs working. You can see we got potential div forming here, so that's good. But I'd like to see some really solid divs. And then, of course, what I really want to see is I want to see W's in price, right? But hey, they're bringing these markets back down. I mean, that's what we're supposed to be doing here, right? Just got to be patient and disciplined. Thought it was interesting, names like, I hope you didn't chase this ARPA, because look at that. What goes up must come down. And here we are right back in reload zones. So if you want to strap on another car, get ready. So the fascinating thing about this is they're just going about the business of cleaning these markets up and probably getting ready for this summer silly season. This RNDR, really good example. M'd out. I hope you didn't chase up here. That was really stupid if you did. You can see where reload zones are. You want to just throw in some stink bids to try and do a little bit of nibbling here. Not a bad idea. Here's a really good example where I think I'd like to see some sort of anecdotal evidence of some sort of bullish divergence in the marketplace before I start getting uber bullish. Now, if they just want to absolutely puke this thing out right back down against the bottom end of the range, fine. Okay, I'll go and buy down here. But for the time being, I'm not really in any big hurry. But what I will say is this is very constructive. They're cleaning the market up and getting ready for the summer silly season. So back to that sort of summary statement. All right. So what I've said here is seasonal forces appear to be hard at work. Yeah, that's sell when it go, buy when it snows, sell when it goes, sell in May and walk away, blah, blah, blah. We're transitioning into the summer trading environment. Usually that pivots around the first or second week of July. The rule is, and if you want to write this down, it's a good reference, that usually the bearish sentiment ends when we enter second quarter earnings season. So somebody write that down. When you hear people stop talking about, oh my God, Yellen's continuing to issue more treasuries and is the economy going to roll over and the macro data is horrible, and they actually start talking about, okay, are these companies actually earning money? And here come the earnings reports, and oh yeah, it turns out Netflix is making tons of money, and up goes the stock, and Nvidia is making tons of money, up goes the stock. So the rule is that usually when we enter second quarter earnings season, that's when we turn the corner, and that is usually about the second to third week of July. So with regard specifically to cryptocurrencies, of course, you saw the news. We got a whole bunch of crap coming out of these US regulators. You could make the argument that actually if they actually push forward with a lot of what they're doing here, a lot of these cases could be overturned later on in court because Mr. Gensler has an incredible conflict of interest here. And he might even know that. And he might even be prepared for that. This might even be part of their plan. Let's shit on this space. Let's try and drive prices down. We know what part of the cycle we're in. We should be thinking about buying because this is, in fact, that's this chart. I personally think that if you were going to make a sort of cycle comparison, I think that the 2015, 2016 bottom is very, very similar to what we're doing right now. I don't know. They always say markets don't repeat and they don't, clone previous price action, but they do often say that prices often rhyme. And I think that's what's kind of going on here. Is it's not necessarily like it's a repeat, but it's going to look awfully similar. That's what I think's happening here. And Eddie says, give me that gap filled, please. Where's the gap? Is there a gap along here somewhere? Or are you talking back up top? Where is the gap? Futures. All right. Well, Eddie's off talking about something else. Let's see. There's probably big holes on the charts on the futures contracts. Boosh. Has that gap been filled in? I mean, technically, according to gap aficionados, no. It's supposed to be a full body filling that hole. There's also a gap up top, so you can tell we will have to revisit back up top as well. So, yeah, it could go both ways, eh? So anyway, the point here is I think we're in sort of this part of the cycle. And Ben Kovchek, if you're out there, I did send him a PM on this site. I didn't hear back from him. But Ben, if you're watching this later on, I'd love to have you come on this site. Because I think what's happened here is Ben was watching Litecoin really closely. And he did just some absolute fantastic research when I was sort of manually running that midweek show, which was just too much work and basically working for other people. But anyway, Ben also was contributing on a regular basis, and he had really great research that he did on Litecoin. And I just wonder whether Litecoin, I suppose we can use Binance. It's got a halvening event coming up here. If I'm not mistaken, I think it's like basically the middle of August, somewhere in this area here. Might be end of July. Let's say somewhere in there. And what was really interesting is I remember the very first time I was in the space and Litecoin had a halvening event, and that was 2015. What a surprise. That was right here. And I remember there was a Chinese guy who was running a Ponzi scheme. Buying Litecoin down at the bottom, bidding it up. And the Litecoin halvening event actually was like right here. So it explains why this chart went so crazy. This was like a buck and a half, and it made its way all the way up to $9. That's a pretty big move, eh? But it was because there was a Chinese guy running a Ponzi there, and literally at this point the Ponzi evaporated and the price just started to melt down. But the basic rule of thumb is that the price of Litecoin usually, and I've also seen it in Bitcoin, it doesn't rally into the halvening event. It usually rallies about a month or so ahead of the halvening event, and then the halvening event itself is actually a pretty quiet event. So kind of like this scenario. And does anybody happen to have the Litecoin halvening event date handy? As I said, I think it's sometime the end of July, beginning of August, somewhere in here. And I mean, you tell me, what letter of the alphabet do you see here, folks? And don't kid yourself. Let's call a spade a spade. I'm not saying it's going to go up. I'm not saying it's going to go down. But I am saying that what are you supposed to think if you ever see the market smiling at you? And I don't like the fact that we went through that low there on that dump. And also, too, this is a weekly price chart, daily price chart. There's your daily chart. Again, looking very emmy. I don't know whether I would really short this. If anything, it almost looks like you're a little late to short. Your short was probably up against here, right? If we went like reload zones. 78.6, Brian's favorite fib, of course, candle body highs or trade location. I think that's probably your killer trade level right in there. We could probably also do another one. Oh, I missed that 78.6. All right. Well, the market gave you another opportunity. Look at that 78.6, exactly the same damn level. And it dumped. So coming in and shorting here, I don't think makes a lot of sense. If anything, the shorts off of these 78.6s up top probably want to take profits at things like 50% rolls. So you can see that's just a hop, skip, and a jump away. And probably, I mean, just play connect the dots. There's the primary trend line. A nice dip against that low would make perfect sense. And then what do you think the odds are that that trend line lines up with things like reload zones, right? So boom, there's your reload zone. So actually, if we can work our way, especially into this tail, all these trap bears in here, they would love to get released. Also, these trap bears in here, they would love to get released. So any kind of stabs down into this, what is that? What does that say? $55? That's probably your buy window down in there. So, and that kind of makes sense. You know, what is this? 40, $50. What a surprise. $100. All the smart money selling half on a double. Then they bring it back down to the reload zones, basically right back to where they originally bought, and they'll load up on the next car. I mean, it's so cliche the way this silly game is played. So anyway, there's your backdrop. And this is why I think that we're pretty close to some sort of topping pivot, because usually Litecoin tops out about a month or so ahead of its halvening event. Once the halvening event is done, it'd be interesting to say which way we go from there. But until then, got to just cool your jets. And then, you know, I thought it was interesting. There were actually, and I didn't want to show this to Sjord because it might have broken his heart, but there were actually people who were playing this RNDR down proxies, you know, these down proxies. There it is over on KuCoin. And look at that. What letter of the alphabet is there? So this is the same conversation as the BTC down, the Ethereum down. I mean, look at that. It's almost textbook. How pretty that. Look at that W. It's absolutely perfect. You know, if you're here to learn anything, folks, please learn the power of these damn W's. And then we can do crazy things like fog and bombs. So, oh, what a surprise, 2.618 up in these levels. Maybe we just got to calm down here a little bit now. But is that a good trade location to go long there? No. You know, you can see where the W is. So anyway, and like I said, we don't want to show Sjord that. That's just going to piss him off. Anyway, okay, let's see. Back to our newsletter. How are we doing here? So regulators, they're trying to come down hard here. They're trying to corral this market. But the interesting thing about this, in my opinion, is they can't go too hard. Because remember, you know, the banksters got what they want. We live in a world of debt. So that means that these economies must grow. Do they grow through hyperinflation? Maybe. I don't think the banksters would ideally. That's not sustainable over time. They could get away with it for a little bit. And you saw they got away with it through this sickness. But then quickly they're like, oh, crap, holy hyperinflation. We better do something about this. So they really do need the economy to grow. And I hate to say it, there aren't a lot of sectors of the economy that are growing right now. There just aren't. Do you want to go into the restaurant business right now? How about the office business? Is that a good business to go into? I don't know. So I think that the U.S. it's treading along a very delicate line here. I don't think that they want to excommunicate crypto from North America. But at the same time, too, they want to send a very powerful message to crypto that you better be subservient to the king, be the king Joey Diamond, or be the king Chappelle, or be the king whoever you want to deem it. It's one of these goddamn banksters at the moment. But you have to kowtow to the king. And this, of course, is where a lot of crypto is at odds with the system. So that's sort of the phase that we're in. But at the same time, too, if the banksters and stuff, if they come down too hard on this space, it's just going to leave North America. I thought it was funny. They're actually somebody posted in the lounge that Hong Kong is now actively soliciting crypto business. And I am sure that the right wing part of the American political party and system is going to remind the banksters that, hey, we need this growth. We need this, and don't alienate these people or they're going to leave and they're not going to come back. So I personally think, believe it or not, that actually what the Peter Finks, Goldman sucks, Joey Diamonds, we all know who the players are. I think that what they're doing right now is they are just trying to corner the market here. It's just that simple. The easiest way, of course, to get the public to sell is to start injecting a whole bunch of FUD. You can make the argument that the Rothschilds, who of course own the Joey Diamonds of the world, they took full advantage of this. I mean, frankly, borderline criminal, where in the 1930s, Joe Sixpack citizen, you're not allowed to own gold. And yet the Rothschilds were able to buy gold super cheap, and the Americans would guarantee, actually the other way around, Americans would sell the Rothschilds gold super cheap, and then they would turn around and or they would buy the gold super cheap off of the Americans, and then they would turn around and sell it into the open market at huge inflated prices over in Europe. So one of the two ways. Anyway, so that's what I think is going on here. I don't think crypto is going to be outlawed. There's way too much institutional investment in crypto in North America. Notice nobody says boo about Bitcoin. So Bitcoin's totally institutionalized here. I wouldn't even be surprised if you find out that secretly Joey Diamond actually owns a shitload of Bitcoins, and secretly Chair Powell owns a bunch of Bitcoins. But because it's an unregulated market, they don't have to tell you anything. So, yeah, there you go. All right, so that sort of summarizes what I think is going on in the market right now. Yeah, so probably that's about all I really want to say with regard to the market. Econs themselves, I don't see anything dramatic here other than what I see is that and I apologize, this looks kind of blurry here. If you actually, this is a screenshot of the PDF. If you actually get the PDF in your email, you'll see this perfectly clear. It's just I took a screenshot of this just so I could show you guys in the video. The data right now, to me, what it says is the Fed is killing the broader economy. Great. The only problem here, though, is that in the world's eyes, at the moment, now this may change as time goes by and things like AI and stuff become incredible growth drivers. I think blockchain and the blockchain technology is going to be an incredible profit driver for things like the banking industry. But things like as I said, invest in office space. That's not a very good idea right now. Invest in, brick and mortar retail. That's not a very good idea. Bed Bath and Beyond. Oh boy. Mr. Druckenmiller, of course, if you listen to him, he's constantly talking about how there's dead bodies still to be discovered out there. And frankly speaking, I think he's right. Regional banks, I think, could still be under a lot of pressure. The one asset, ironically enough, that the world likes right now is U.S. single-family homes. And unfortunately, the way that they've gone and securitized the housing industry, which, for the better part of 100 years, there was no housing inflation because after the Great Depression, they kicked the fucking banks out of the housing business and out of the securitizing of the housing because people ended up losing their homes through the Great Depression because of the bullshit that the banksters did prior, making houses securities. Well, here we are again, folks. They did it all over again. So as a result, it turns out that the most favorable investment product in the world right now is US, and to a certain degree, I don't think, in fact, Canadian single family homes were probably even a better investment. But because the market has become this just absolutely insane bubble here, and the fundamentals just don't make any sense at all anymore, I think actually this is setting up a crash scenario. It's just, when the fuck does this goddamn market crash? It's taking forever for it to play out. I think it won't crash until we get that idiot substitute drama teacher out of power in Ottawa. And day after day after day, he just keeps sinking himself further and further into trouble with all the scandals that he's involved in. So I think that's one of the reasons why the things are starting to show cracks in this just absolute stupid fundamental situation in my country right now. But long and short of it here is, the data is basically saying the broader economy is getting beat up. We actually have unemployment numbers ticking higher in Canada, and I think that was a big release on just on Friday. The unemployment rate is actually starting to go up now in countries like Canada. So the central banksters and things like this services sector is very weak down in the States. And again, my apologies, this is blurry. Just pull up the PDF and you can read all this if you want to. The purchasing managers index in Canada here, for example, also weaker. So the data itself is supporting the idea that the Fed is killing the economy. I definitely agree with that. So the issue here, unfortunately, though, is that the housing market, it is like literally the preferred asset to invest in by international fund managers. And I don't think you're going to get I don't think it happens down in the States. I could very easily see the bubble in countries like Canada finally pop. And unfortunately, when it does pop, like TD Bank, one of the biggest Canadian banks in the world, is actually officially the most heavily shorted bank stock in the world right now. So I don't think that's an accident. You've, of course, heard Brian going on endlessly about the fraud of this Canadian housing industry. When exactly this thing pukes out, I mean, you can see lower highs and lower lows. It makes sense that this thing is a preferred short proxy. And, Eddie's talking about gaps. I mean, you can see these gaps. These gaps need to be filled in. So, it's just a question of time, really, more than anything else. And also, too, this is a proxy on the commodities countries. Countries like Canada, Russia, Australia, absolute shit shows right now. They're shorts. Stay away from them. Do not invest in those countries. If you're going to invest in any country right now, the irony of it all, I think, is that the country to invest in is the United States of America. And right now, I think that that's exactly what's happening with things like NVIDIA, RNDR. Like this, I think, is the future. The only problem is you can't chase that. What we should have been doing, of course, getting all excited when this thing was double bottoming down here. Or, which is even super cooler, maybe what we need to be doing is following TRI's outside upside key reversal screeners. And of course, this one spat out an outside upside key reversal right there. I don't know. You tell me. Would that have been a good trade? Methinks so. So, this is sort of the stock market for the next 100 years. Actually, interestingly enough, Tesla is kind of moving away from the States. I mean, W's are W's are W's. The only problem is I don't really like this as sort of a classic textbook W. This is more like a bull flag, in my opinion. So A to B, C to D. And notice, remember Eddie was talking about gaps there earlier. I think we fill in this gap to the upside here. But notice that when we do that, we're going to be running into a massive market structure top. So this is kind of like, I would call this like the dead cat bounce. So we're bouncing into resistance off a V bottom. I suppose the absolute best scenario here is we just kind of go sideways and then work our way higher. And maybe this is some sort of inverted head and shoulders. And then your next buy signal would be a breakthrough there. So I don't know. The issue that I have here, I would much rather, to be perfectly honest with you, much rather invest in something that looks like that. Doesn't that look like a better chart? To me, this looks like a way better chart. Look at the volume ramping up here. God damn it. And look at this momentum, higher highs and higher lows. And look at the momentum ramping up here. And then, of course, there's damn W's that damn Beamish guy's always going on about. Jesus, look at that. Eh? Also, too, with the Tesla, you're kind of fighting against existing downtrend, but you can see there's your downtrend on Toyota. And this thing's already turned the corner. So, interestingly enough, if I was going to do a trade, I think I would rather be long Toyota and short Tesla as sort of like a spread trade. And I'm not really looking for Tesla to go down. I just think that that Toyota it's gonna have a bigger up here. That if I was gonna, and I mean, look at these gaps all the way up top here, right? So, and I do like the talk, especially Stewart. He's super enthusiastic about hydrogen. And Toyota, of course, recently came out with a hydrogen engine. And from what I understand, it's being very positively received. So if you're going to invest in a car company, I think I would much prefer to be interested in something like Toyota than Tesla. MOS, I have no idea what that is. What's that? MOS, Mosaic? Isn't this a fertilizer company? No. You see any W's there? I don't see any W's. So I don't know whether that's what you're talking about, though. So now I wouldn't touch that with a 10-foot pole. There's nothing there for me to get excited about, which sucks because remember, we were super bullish of the grain markets a while ago. And I was kind of like, I want to get long grains. I want to get long. And then, the Russians completely let us down. Hey, stupid idiots can't even fight a fucking war. So it looks like Ukraine's not in trouble anymore. I was expecting Russia to just steamroll over Ukraine and nationalize the whole country. So highly disappointed in those Russians, man. I mean, Jesus, somebody teach them how to shoot a gun. Anyway, the grain industry, there's no, I mean, hell, you look at things like the soybean market. Soybean market looks like, ugh. I mean, I can't buy that. It just broke to new lows here recently. There's M's there. I don't see any W's. And that's the strong part of the market. Let's take a look at things like corn. Ah, look at those M's. Yuck. Ain't not much to get excited about there. And then we actually look at like where Ukraine counts. Ah, yuck. That looks horrible. Where's my W's? Right. And then of course, we're not really supposed to be bullish of this thing unless we see W's on the other sides of trend line. So at best, you get a counter trend rally into the trend line, but that's about it. So I'll tell you, I was bullish of the grain markets. And I was thinking, what, this, especially in this kind of window right here, okay, come on, let's ramp up, let's W out, let's rock and roll. And what's ended up happening? Actually, the weather isn't so bad. It's so ironic, these stupid global warming people, they get all up in arms when there's really, really hot weather. But I put out a tweet the other day. This actually is very typical weather for North America right now. I don't hear any global warming people talking. This is 60 degrees Fahrenheit in the middle of June. We're freezing our asses off. You go outside, you got to have like a sweater with you here. Well, I thought this was global warming. What's going on here? What a joke. So, it just goes to show, just like the sickness, this whole global warming thing, it's just another political tool. I wouldn't even be surprised. Remember, we saw during the sickness, there was some asshole walking up and down the freeways of Washington state there with a blowtorch actually setting fire to the roads. Now, you wonder why they have global, or not global, get me all excited now. You wonder why we have these wildfires. Well, maybe stop these people from just walking up and down the freeway, setting the goddamn grass on fire. Like, what the fuck? And of course, the worst part about that is I saw it once on the major news, and you never heard anybody talk about it ever again. I mean, because these media outlets are totally controlled. So, anyway, what a great analogy. Where's your goddamn global warming, you jerks? Okay. I think I've talked this document into the ground now. My favorite trade right now in crypto is actually the short proxies, being long the short proxies that go up in value when Bitcoin price goes down. So there you go. I think I talked the Bitcoin chart up a good deal here. And hopefully you understand my logic, right? The long, slow process of correcting, 12 weeks of consolidation to stop the bull, only now has the down actually begun, right? We're actually starting to see moving average support cracking. Dangerous double whammy here in the short term. We've got the SEC, who's obviously a political puppet of the Democrat Party. Democrat Party is a political puppet of the bankster 1% elite. They are at war with the crypto industry. And TBG, you're here with me. I would love to hear that you've gone and picked up a property down in El Salvador there, and you are actively shopping for a little piece of property that I can buy as your next door neighbor. Please. Thank you. At the same time, too, we've got a deluge of US Treasuries that are about to hit the market and that are going to suck up all of the liquidity in the marketplace. I think that we are working our way through a bearish megaphone pattern that is about maybe halfway through. Do we have to go all the way down to the bottom of the megaphone? My hunch is we probably stall out at the midpoint of the megaphone. I think there's plenty of case for support to be made here into the end of June, beginning of July. Down at Foggenbaum's, midpoints of megaphones, 50% rules, trend line supports. I like that as an objective here. And then, of course, if we do absolutely puke out into reload zones, then, my friends, that is an absolutely fantastic buying opportunity. Told you repeatedly, 2023 is a buying opportunity. And finally, off the lower time frames, all I'll just simply say is, bearish setups are continuing to work away, but it is choppier than hell out there. And I even noticed like yesterday, and I put a tweet out about it, just on a typical Saturday, the crypto kids, they're just, this is the bull, this is the bull. Oh my God, I'm going to miss it, right? That kind of thing. And that's what usually happens. But in a bear market, this is what they love to do. So put in a base. Hey, that Beamish guy says W's are awesome. All right, wait, let's all go long. All right, we're a bull. And then, oh boy, stop them out, washed out all the weekend lows. Then instantly, woo, straight up, told you, suckers, I'm a bull. Look at me go. Woo! And then loses its inertia, and then boom. And all the people that bought in here, these suckers, they all got stopped out. What do? They stop them out as well. But I mean, just, I'm a bull, I'm a bear, I'm a bull, I'm a bear. And the irony of it all is at the end of all this, price basically hasn't moved an inch. That is very typical price action for a bear market, folks. I'm sorry to say it, but it really is. And it's very typical of sort of the FU-ery of capitalism. So there is that chart. And interestingly enough, following all that insanity, now they're just slowly climbing the market higher here. Where it stops, and nobody knows. Not really that interested in taking any trades off of the 4-hour right now, because as I had said earlier, I really think that we're kind of in no man's land. And now that we've got the Fed meeting coming up, if anything, you almost want this market to be down into that Fed meeting, because that might actually finally be the marker that this is the end of the move. If they go and crank this damn thing up and rally into that Fed meeting, this whole damn thing might be just one big ass trap and we roll over following the Fed and make new lows. So be careful here, folks. They said we're not out of the woods just quite yet. Having said that, there's your trading range. I mean, this trading range is wide. Top end of the range, all the way up here. Last week's video, I had mentioned this. There's a bunch of trap bulls up there that would love to get released. They could rally this thing easily $2,000 here. No problem. And then on the other side, they bring the market right back down into these tails. And maybe this is some sort of big honking head and shoulders. I can't justify buying here. Can't justify selling here. We're in no man's land. And frankly speaking, looking at the way that this 4-hour chart looks like to me, this has got trouble written all over it. Choppy, choppy, choppy. Ironically enough, this is actually the objective of this bear. ABCD is down here. And this smile pattern, the Foggenbaum objective is here as well. So I definitely like the idea that we have to trade back down in here. But look at the volatility here. You could very easily see that we are all over the map here through this window. And that's probably not very helpful information, but there you go. Okay, I think that's about it for the commentary. I don't know whether I hopefully I did some value there for all of you guys. The AMA, did we have any questions today, Chris, or was it hopefully not too many questions were asked? I don't know.
I did not see any questions asked this week.
Okay, cool. All right, so then we don't have to worry too much. If anything, that's a good analogy that the instructors, oh, actually, there you go. This is the PDF document, isn't it? So actually, if I wanted to zoom in on this, I could probably give you a better, well, yeah, there you go. Now you can actually see the numbers. Oh, well. Go figure. Okay, so if there were no questions, then it's 12:35. We could probably wrap this up fairly shortly. I do see there was a couple requests. Just 1 or 2 cents. Oh yeah, okay. We talked about that. All right. Well, sounds to me like Sharktoshi and Grimtoshi are doing their jobs. So way to go, guys. If the students don't have any questions, and that's good commentary that we're getting all of our concerns addressed in class. Did have a couple people ask whether they could have access to the little old lady canasta club spreadsheet. It's not really, I mean, there was a group of us that went to Portugal together and we were all kind of like, hey, you know, rather than go and buy a place now, let's take some money and let's go and ramp it up to some ridiculous amounts of money. And then we'll take that money and go and buy a place in 25 or 26. So that's what a lot of these kind of people were. Like Eddie, of course, this is his spreadsheet, really. So you can see there is Eddie's work. And like he said, he got like 40 doubles off this this cycle. So well done, sir. Very impressive work. Let's see where we are here. I have just been accumulating away. I'm just buying everything I can. I got a few doubles off, so I suppose that's not terrible. There are some people that join this club, but then are like, fuck it. I don't want to do this. I'm out of here. So I don't know what happened to them. There are others that actually would like to get together with this summer and jump out of airplanes. You can see Zug here. loves to jump out of airplanes and he wants to push me out of an airplane along with this guy over here. So, and actually, if we're really lucky, maybe we can even get a group together. We're going to try and do it maybe, I don't know, end of July, in about a month and a half, in the Chicago area. I don't know whether this is really a document that we really share, though. Like somebody was like, "Hey, Brian, can you add me to the list?" I mean, we have a few people that have been added. Cat, is that? I'm not sure who that is. There's Joshy Poo. There used to be a lady on the site that used to call Joshy. I don't know whatever happened to her, but oh well. So I guess Josh is part of the team, although what I would really like to see is you build out a nice solid list of names. You can see that, I mean, there really isn't much to this. So I don't know whether there's really a lot of value in me sort of sharing this document with you. It's just sort of what we have. And, you can take a screenshot. You can see most of us basically have the same names. I mean, you can see I've got like 27 names on here. In fact, actually, I've even bought a few more here since I last updated this. So there really isn't anything to share. I know there was one gentleman on the site who is a site vet that wanted access to this. But as I said, it's not really like there's anything to really share here. We did kick around the idea of doing sort of like a formal club and all that kind of stuff, but honestly, for the amount of work that's involved, I don't know whether that really is worth all the effort. So I don't know whether there's really any value in sharing this with you. I mean, like I said, what I would just simply say is I've scrolled through this. You can see who the people are. And more importantly, you can see what the names are. If you want to do this as well, there's no reason why you can't. So anyway, I think I'm just going to leave that at that. Yeah, it is a fun little club that we have, but we haven't gotten together in months now. And I really haven't heard any interest from any of those other people in sort of continuing the club conversation. I will just keep doing what I do. I mean, this is the exact same thing I did last couple cycles, so I'm just going to keep doing what I do. But I don't really know whether there's any benefit in sharing that document with you. TBG says I got a whole lot more to add, and with these prices I'm going to add more. Good. Yeah, excellent. Right. Yeah. Eddie says he posted it in the lounge. So there you go. In fact, actually, what I'll probably say, I guess if Eddie posted in the lounge, then it's just basically open invite. So what I'll just say, oh, there you are. Yep. So rules and strategy. So, all right. So Bob T, I know you wanted part of this. So there's hook up with Eddie to become part of that. And then there was also another person on the site that also asked me. Yeah, there's Bob. So I'm gonna say touch base with Eddie. Something like that. Posted in the lounge. And then there was another person. I'm gonna say touch base with Eddie. All right. And I told these people that I wanted to touch base with the actual Canasta Club people before I let people in. So if anything, we'll let Eddie be the official policeman for all that. So there you go. All right, let's do a quick look at the YouTube page. DMAX says, damn, Brian, can you read YT? Oh, what does that mean? Did I miss something? Is that YouTube? Exclamation, exclamation, exclamation. What's this? Correct your average entry BT on LTO. Yeah, people were telling me about that. I suppose you guys, you're sticklers for details. Where is the? I thought I just had it on here, but I suppose we're gonna load it back up. And I think it's like I just have one decimal place off here on this thing. LTO, yeah, it's not 93, it's 0.0936. There you go. No, oh, look at that. Oh, did it go wrong again? Let's try that again. 0.0. Well, now it's just 0. Maybe that's why I had it like that before. There we go. All right. And maybe some of these are wrong too. Where, I do have my own personal trading plan sheets that I show you guys like on the daily briefs and stuff every day. So that's over here. This is where I sort of track it in earnest. Let's see what I have. LTO 0.0937. So there you go. And frankly speaking, I wouldn't be surprised if a lot of these names actually trade to new lows. So don't be surprised. I'm not a bull yet. 2023 is the accumulation year. It's not the selling year. So just be forewarned, right? I'm probably going to be sitting on a lot of these for a while. And I'm perfectly fine with that. As I've said before, I am not here telling you what to buy. I don't give a shit what you do with your money. Your money is your money. If anything, I am here to tell you a little bit about my personal experience, some of the rules of thumb that I've picked up over the years investing and trading. If you can learn from this, awesome. If it can help you with your behavior. In fact, actually, I put a tweet up the other day that was absolutely perfect. I mean, this is exactly why I'm doing all of this. Let's see if I can find that. No, it's not here. I can put that away for now. And there's no question, so we don't need to worry about that. I can put Shane's cost of production away. Oh, maybe I'll save it. And this probably is a really good way to end the broadcast here today. All right. Well, maybe two things. Number one, I love this tweet. This tweet is absolutely perfect. So I'm more than happy to tell you what it is that I'm doing. It's my money, or it's money that TRI has given me to manage. I have 100% confidence that I can lose money as good as anybody else. 100% confidence that I can lose money like a boss. In fact, all of the plans that I built specifically expect me to be wrong at least 30 to 40% of the time. 40%, that's a big number. So, I'll tell you what I'm buying and selling, but there's no guarantees of performance whatsoever. In fact, I had somebody maybe about a month or so ago come on and demand that I show them 5 years of audited statements from the big 4 accounting firms. It used to be big 6, but a couple of them. Turns out that they cooked the books a little bit. Oh, imagine that. Institutional players that we have our trust in our society are actually frauds, Joey Diamond. So, I mean, the irony of it all is that these people put this faith in these big six accounting firms, big four, but they're just as much liars as anybody else. I mean, I almost find it funny how people just blindly trust they're no difference. Humans are humans. They sure love to lie. And I told the person, I said, well, yeah, I've never told you that I'm going to give you audited statements. Never say that anywhere on any of our literature. Never. Um, like I do on my profile picture, I do crazy things like I tout the fact that I said publicly on Coinigy broadcast that we did years ago that I was going to take 500 and turn it into 100 G's. And the day that I actually hit the 100,000 mark, there were tons and tons of people on the site. Really, the way that you audit this statement is talk to anybody who was in crypto through 2015 through 2017, 18. Everybody saw me do this in real time, and it was not rocket science. And the irony of it all is that actually this portfolio topped out at about 300 and what was it? 150 plus 175 is 325. So it eventually topped out at about 325. So that's 3 times what this is. So anyway, but am I going to give you audited statements from big six accounting firms to attest to the fact that I know how to trade? No, I don't give a flying flute. And I'm not here to tout that I'm like the best trader in the world. I never say that ever. So at the same time too, are there some like generally accepted practices when it comes to doing things like running a small business of trading? Okay. Cold-blooded Schiller. Where was I? So if it's one thing I do know, it's the process. Now, even a 35-year market veteran has a hard time following the process. They always, like it's kind of like your parents growing up. Do as I say, don't do as I do. Well, mom's sitting there fucking hacking away 2 packs of smokes a day. Don't smoke, it's bad for your health. But there's no doubt about it. The process is the process is the process. So if there was something that I was going to be able to hang my hat on, it is that I know the process. And if you follow the process, believe it or not, it's actually very difficult to lose money trading. The key, though, is most people don't want to follow the process. And that includes every single brand new peer person to TRI doing like 100 paper trades. And not just going and filling up the 100 paper trades, just okay, okay, there's a W, find it, okay, stuff it in the spreadsheet. All right, okay, there's 100, okay, I'm done. No, that's cheating. I mean, just don't kid yourself. It's going through identifying the 3 steps: trade location, indicator confirmation, price structure. Do you have appropriate risk management strategy in place? Do you have appropriate self-management strategies in place? Do you have all the tools in front of you to assess whether you're actually doing what you said you're going to do? Can you follow that 3 steps to actually taking a trade? And then, like as this kind of pointed out, and like I said to start off this broadcast today, this has actually been a privilege to actually go through and show you step by step by step how long a very typical setup takes to develop, but then also to, once it has developed, to fire, than to actually watch the setup play out over time. And how long does that actual trade take? And in this case, there's Bitcoin. I was kind of hoping I could show you the very first one that I did. In this case, this setup is taken like literally 4 or 5 months. Yeah, so here, this was as of May 1st. Should be fun to thread to watch age, got location, got indicator confirmation. Now all we need is a nice M to confirm structure. This is everything that I teach you guys. This is everything about the process. This is everything about learning how to run and effectively trade, a small business of trading. But to say that you can do 100 of these trades in like a week, I mean, come on. I mean, it might take you a couple years to do 100 paper trades and actually get to the point where you're like, okay, I got to patiently wait for location. And maybe it takes months. And I walked all of you through how long does it take to wait for this setup to actually develop and fire? And so far, this has now been about a month and a half. And just patiently waiting for it to develop. Then when it does develop, can you fire? Then can you not get in your own way and tinker with the trade and fuck it up and just wait for whatever outcome it is that you theorized was going to happen to begin with? Either we hit the 50% rule and you ring the register, or you get stopped out and you take your dollar loss. And theoretically, your average winner should be bigger than your average loser, and your average well, let's just leave it at that, right? Your average winner should be bigger than your average loser. If you make sure that you risk $1 and that's the maximum risk that you take, but when you're right, you get paid $2. Well, that is your average winner being bigger than your average loser. So, getting back to this original post that I just did the other day, you come to TRI. And what is the product that you're buying if you join the school? You're learning how to build a trading plan. What goes into the trading plan? Why have a trading plan? What should not be in the trading plan? Do we give a shit about whether your dog has a haircut this week or not in your trading plan? Probably not. But if your dog getting sick affects your mental state and maybe your dog passes away and it's a dramatic psychological impact on your life, well, that definitely is in your trading plan. How about self-management? Things like, can I build a trade log? What should go into the trade log? What shouldn't go into the trade log? Do I actually understand the various different types of risk takers in the marketplace? And more importantly, do I understand who I am as a market participant? And when I say I'm talking about each and every one of you talking and asking yourselves. This is what you take the education program to learn. And then, this is all part of sort of the very first part of our education program. Hey, whoa, look at that. Hey, I swear I'm getting Ron rich again. Woohoo! I love Ron's. Actually, Eddie, you're slacking off here. Paul here, geez, he just hit me with 50 Rons. What are you doing here, Eddie? Jesus Christ. Just kidding. Actually, you're back in Tanzania. You can only tip in bags of coffee now, right? Well, thank you very much, Paul. Hugs and kisses. You're a sweetheart. Actually, I haven't heard from you in a while. Maybe you ought to come back on the one of our Friday shows. I suppose you're all busy off running your own advisory service now. Paul, if anything, Paul is got to be like a textbook success story of TRI. So the point being that I'm not here to reinvent the wheel. This has been already invented and then reinvented about 50 times over. But because I was a full service stockbroker, options broker, derivatives broker, futures broker, investment advisor, financial planner, I mean, I had to do this for clients because that's how I earn my money, right? As a financial advisor. And then I was a prop trader. Cotter. Now, don't be mean, Cotter. I mean, what the hell? 50 runs or 50 runs? We can buy, how much chicken feed can we buy for 50 runs? Probably a hell of a lot. And he says he has a ton of coffee to give me. All right, cool. We got to get you jumping out of airplanes in Chicago in the end of July. Oh, hey, look at that. The focus went all out of whack on the camera. All right, anyway, what time is it here? Oh, shit, I got to get going. Okay, so the point here is I'm not reinventing the wheel here. I think we have the process down pretty slick. And for the amount of money that we charge you to teach you the process, this is ridiculous. So, for God's sakes, if you want to learn how to run a small business of trading, this is the place to do it. We've got a whole bunch of people that are really, really good at this thing called the process of running their small business of trading. Whether they have audited statements from the big 6 accounting firms, I can tell somebody that knows how to trade versus somebody that doesn't. It's so obvious. It's not even funny. Most of the time, the people that know how to trade, they always start every conversation with, okay, well, how much am I going to lose if this trade is wrong? And that's how you tell whether somebody knows what the fuck they're doing in this business or not. But if you're going to take the school program, just come to learn about all the different parts that go into running an effective small business of trading. And then, of course, the coup de grace to all this is every single one of you should be trading setups. What are your 3 unrelated reasons to justify you acting in the marketplace? And really, one might argue that level 2, level 3, and even now level 4 are nothing more. And really, you could even argue half of level 1 are nothing more than just giving you and teaching you all the different ways that you can come up with those 3 unrelated reasons: location, indicator confirmation, price structure, go. Whether it be, anything about, price itself, whether it be indicator information, whether it be location tools, whether it be volume analysis, whether it be volatility analysis. I mean, the candy store is endless. I would, Quinn, but unfortunately I'm run out of time here. I got to go. So I just really wanted to finish off of this. Now, you could argue that TRI's algorithms and the breadth indicator, these are just yet more quote unquote reasons. And if you wanted to use the TRI breadth indicator as your indicator confirmation, fine by me. What I will say is that this tool that we have built, it is like my lifelong career. Everything about my career all wrapped up in one squiggly line. And it works pretty damn well. But understand that the 2 biggest parts of this whole equation actually have absolutely nothing to do with TRI, have nothing to do with Brian, and have everything to do with you. Can you be patient and disciplined and run your trading plan? Can you? I can't answer that question. What I do see is I see a lot of people come on the TRI site and just sort of copy trade what I do. And I go through win streaks. And when I go through win streaks, oh, they think I fucking walk on water. And then I go through lose streaks. And by the way, don't fight the Fed. We're not supposed to be doing anything in the market right now until the Fed has actually said that they're done. But nobody listens when I say that shit. They just went and bought all the shit that we, traded through the silly sickness market state. Then the market state changed, and a lot of those names all just fell apart. And then, some of them actually go bankrupt because the Fed puts them out of business. And then I start to hear, oh, you're a fraud and you're all full of shit and you can't trade at all and all that. That's not why you're here at TRI. I told you guys repeatedly, and I'll say it once again, I am not here to tell you what to buy and sell. You can buy and sell what I'm doing, but I'm not telling you to do it. It's your money. You do it whatever the hell you want with your money. I'll show you what I'm doing. Sometimes I make money like a ridiculous motherfucker, and it's just insane. Sometimes I can't trade my way out of a paper bag. That, sadly, is actually a commentary of every trader's life. It's also a commentary, too, on the market state. So I think I'd like to leave the video off just with this idea. I had no idea what was going to happen here. This is a setup, El Tangonator. The setup seems to be working, just doing its thing. If it hits its profit objective, great, wonderful. If it got stopped out at a full loss, well, shit happens. Next bus in 10 minutes. I know for certain the El Tangonator works a good 60, 65% of the time. I'll even say sometimes in hot markets, it almost seems bulletproof. But that means by definition that sometimes in soft markets, cold markets, I have to book several losers in a row. It's just the way trading goes. You're more than welcome to learn the El Tangonator, run it yourself. I can tell you a lot of people that I work with over time, they don't like trading my setups, and that's fine. If anything, what we have to do is we have to figure out you as an individual, what type of personality you are, and then we have to figure out the setups that speak to your type of personality. These setups speak to my personality, and I love trading them, and it's my pleasure to show you them working away in the marketplace. But there's no guarantees in this business whatsoever. And if you're going to learn anything at TRI, this is what you're here to learn. Learn how to behave. If I teach you how to behave in the marketplace, then I've done my job and I don't have to worry about you blowing yourself up. Okay, I think I'm going to leave it at that. It is a little bit past 1. I got to get the hell out of here. So have yourselves a great rest of your day. PMA, everybody. Slow and steady wins the race. Thank you very much for all the wonderful donations. Liam's going to have a $43 lunch this afternoon. Lucky bastard. Say a prayer for Lily. It is what I go and do for the rest of my Sunday here. Try and give him the best afternoon possible. Slow and steady wins the race. And we'll try and have another conversation along the same lines. And Quinn, if you can pop on the site tomorrow, maybe even sign up for the 30-day trial. In the after party, I will make it a point to look at the names that you asked me to look at here today, okay? So, if you want, do the 30-day trial, then that way it won't cost you a dime, of course. Hopefully I'm spitting out tons of positive karma. I'm spitting out tons of PMA. And you people watching this go, actually, I wouldn't mind joining this guy and try to learn a little bit from him. The prices that we charge for the basic site membership, I think are extremely reasonable, especially in this hyperinflation world. And that would be, of course, a great way for you to help. Also, too, if you did like the video, please hit the like button, subscribe, tell your friends about the channel. Just watching the YouTube channel, we give away just tons and tons of stuff for free. So hopefully I'm making that positive difference in the world that Jojo asked me to do so long ago. So slow and steady wins the race. Hugs and kisses. Have yourselves a great rest of your day. PMA for the win. All the best. The only thing left for everybody to say is bye.